Hey guys, this is Paul from Black Edge Trading. In this video, I'm going to be talking about what we're looking at this week, the events we have going on this week, financial events. I'm going to be talking about Amazon, Meta, Microsoft, Google, and the overall stock market, the S&P 500, the NASDAQ 100. We're going to take a look at the Dow Jones, and I'm going to give you some levels to watch and just my overall opinion. Please like, subscribe, and share this video and our page. Our goal is to give people of color an edge in the market by sharing the knowledge I've learned over a decade in the industry. So just tune in. We're going to be dropping gems on here. We also have financial courses available. On Teachable, we have stock markets for beginners. We have introduction to stock and options trading for beginners. I have all video course. We have Black Edge Trading, which is mastering supply and demand trading strategy. It's the professional trading strategy I use at my fund. I have institutional investing. Invest like the pros, learn how to invest like institutions, and portfolio management. This is a dual course which combines these two courses, Black Edge Trading and Institutional Investing and Portfolio Management. We also have coaching available, and I have an all-inclusive bundle which includes all 5 courses. We're running a promotion this week. We're 30% off for our courses. If you type in 30 off, you'll get 30% off of any package. So let us know. Also, if you click on these, you can purchase them with a firm where you can break it up into payments, and that also you can also get the 30% off on that. So just check us out. It also comes with a free Discord where we post every morning. We have like a pre-market where I show you the levels I'm watching in the market. We have a main chat where we go over what I'm trading after the market opens, and I also have this voice chat that I hop in daily, and other traders will hop in here, and we all talk about what we're trading, what levels we're watching, what we're using to trade. So check it out. It's a lot of great information in here. We have a free trading journal that comes with it. We have some trading rules just to go by to help people out, so we don't leave you in the dark. We walk you through stuff, and we help you make money. A lot of money's been made in this chat, so check that out. All right, well, let's get started. So this week on the economic calendar, we have the Fed decision. Will they raise interest rates? Will they continue to pause, or will they drop interest rates? We'll find that out on July 26th. We're right now at 5.25%, the interest rate. They're forecasting for a 5.5% interest rate, which means that they may raise interest rates by 25 basis points. This will definitely affect the market if they raise interest rates. We'll probably have even more of a pullback. We've been in an uptrend, but we had a pullback after Tesla's earnings last week. A lot of the NASDAQ companies have been leading the market and taking the market higher and higher. But a lot of those companies have hit their all-time highs and may have run out of gas. So we may be pulling back pretty soon. We're about 250 to 300 points off of the all-time high in the S&P 500. So this is definitely something we want to watch, see how this plays out. The decision is July 26th at 1 p.m. Eastern Time. They have a press conference at 1:30 Eastern Time on the same day. I normally do not trade until after the decision is made, and then I read the article on the decision, look at the numbers, and then I place trades based off that information. If we stay the same, I believe the market can rally. If they do decide to raise interest rates, the market will definitely pull back. And also, if they drop interest rates, I believe the market will rally. So this is definitely something you want to watch. Then we have durable goods orders, GDP growth. This is another important thing. Right now, they have us forecasted at 2%. If the economy is slowing, right now they have us at 2% with a forecast of 1.7%, which means they forecast that the economy is slowing. Let's look at the other stuff we have, and that's on July 27th at 7:30 a.m. This information comes out on July 28th at 7:30 a.m. We have core PCE price index, personal income, personal spending. So we want to see if personal income is up. They forecast it to go up. Want to see if personal spending is up. Now, one thing to watch, if personal income is down and personal spending is up, that means a lot of people are using credit cards. That's another thing to watch this week. And let's announce that we have Microsoft, Google, Amazon, Meta, Boeing, Louis Vuitton, Hennessy, Samsung, Shell, Visa, MasterCard, Hermes, Chevron, and Exxon all reporting this week. To kick the week off on the 25th, we have Microsoft, Visa, and Google. Then on the 26th, we have Meta and Boeing. Then on the 27th, we have Amazon, MasterCard, Samsung, Shell. On the 28th, we have Hermes, Chevron, and Exxon. These are definitely some things you want to watch. A good mix. We have credit cards reporting, so we'll see if there's a lot of credit card debt out there. We have some of the major tech companies reporting this week. We have some high-end luxury brands reporting. We'll see what these luxury wealthy people are doing with their money, if they're still buying Louis Vuitton and Hermes, or have they taken a break. We'll see what the oil industry is doing with Chevron, Exxon, and Shell. We'll see what that's looking like. But yeah, that should be, we should have a packed week full of entertaining economic data. Definitely a market moving week. Definitely want to tune in, get ready, stay focused. All right, so let's take a dive into the overall market. Let's look at what we're, so this is a weekly chart. Each candle represents a week. Here we are this past week. Two things I want to look at. So we've been in this uptrend. And then this is in 2022 when the uptrend stopped after they started raising interest rates. We broke out of this downtrend in March of this year. And we broke out, retested, and now we're in another uptrend. I want to see if this uptrend can hold. We're about 300 points, 250 to 300 points off of the all-time highs on the S&P 500. Like I said before, we need to watch that. We're coming in this area where we previously had some sellers. If you can see, we had a big sell-off right here. And we're coming back into this area. So we need to watch it right here. It could be some old sell orders still stuck here. That's definitely something we want to watch. See if we can break above this level. Break above this 4,600 level, 4,635, and then make a press towards all-time highs. So we'll be watching that after this economic news. That's on the S&P 500. Let's look at the NASDAQ 100. A lot of similar companies. Most of the companies in the S&P 500 the top weighted companies are similar to the top weighted companies in the Nasdaq 100. So if you look at the two charts, they look very similar. As you can see, we had the same breakout in March. I'll give you a visual representation of what I'm talking about. Or we broke out of this downtrend and we started this new uptrend. So we'll see if this uptrend can hold. Like I said, we're coming into sellers right here where we previously sold off. You can see this doji candle followed by this big engulfing candle. This is where we previously have a massive sell-off in January of 2022. We're coming into that area right now. We need to watch that on the Nasdaq 100. We are about 700 points off of the all-time high on the Nasdaq 100. But a lot of the Nasdaq 100 leading companies that have benefited from this AI boom have hit their all-time highs. So what does that do for the overall industry? Because there's 100 companies in the Nasdaq 100. It's 500 companies in the S&P 500. And there's about 10 companies that really move this sector. And it's about 10 companies that really move the S&P 500. So they're the biggest market cap weighted companies. Funds that only track the S&P 500 allocate a lot of money to these companies because of their market weight and their market cap and their overall weight in the sector. So this is definitely something we want to watch. So we're watching that. Let's look at the Dow Industrial Average. This is 30 of the largest companies in the U.S. We are coming back into this range where we sold off before. We're about less than 200 points off of the all-time high for the Dow. We definitely want to watch this, especially with interest rates still up. It's a lot different from last year. I mean, right here, we had low interest rates on this rise. Now interest rates are at over 5%. I think this time last year we were somewhere around like 2.5 or less than 3%. Definitely want to watch this. Let's look at Amazon. So Amazon has earnings this week on the 27th. We just came off of Amazon Prime Week. A lot of people were buying stuff. Amazon has an advantage in shipping. They can get the product to you same day or next day, which is cutting out a lot of the competition. They have their Prime Day. A lot of companies have tried to match that, and they'll have like a Target week, a Walmart week, Best Buy week. Only problem is you can't shop online and get that product sometimes same day or next day. You have to wait. But with Amazon having a lot of fulfillment centers, they're kind of beating the competition. It's been in a slow pace ever since the stock split, 20-for-1. So this is definitely one we want to watch. If we can get above this area right here and push up into this 144 area, we could have a breakout and have a pretty decent move up into some higher numbers. But we'll have to see what earnings gives us. We may get a pullback right here. We just have to see. I have some levels when I switch over to my Thinkorswim charts. I'll show you the levels on these. Meta, great comeback this year. Stock was way beaten down. But advertising dollars have gotten back up on Facebook and on Instagram. They came and had the verification where you get the blue check mark. They made a lot of money off of that. People are paying, I think it's somewhere around $14 a month to have that blue verification mark. And I mean, that's a great thing for them. Great way to monetize, um, bring in some extra money. The Oculus. I think they came out with a new Oculus. I actually bought one. It's pretty awesome in the metaverse. There's some adult things to do. Like I like NBA basketball. Enjoyed the playoffs, watching the playoffs in the metaverse. Um, you can go online on the internet and shop in the metaverse. It's pretty cool. The screen's just right in front of you, like you're in this virtual um, apartment or house, and you have a big screen in front of you with the internet on it. You know, you can search anything. You can watch games, watch movies. Netflix has a big room. You can watch fights. I'm talking courtside, ringside, watching fights. Football season's coming up. I'm gonna check it out, see what that's like. They have a lot of different camera angles. That's pretty cool. Be cool to have a sideline camera. So definitely something I want to check out. I have some levels for Meta that we're watching. I'll give them to you later. But we're pretty far off the highs. We're still another almost 100 points off the high, 80 points off the high. Microsoft, we kind of peaked out on Microsoft. Even though we could go further, I think a lot of Microsoft has benefited off this AI boom. I'm not really sure what new products and stuff they've come out with, but definitely something we want to watch. We're in this new territory where we've reached all-time highs. Maybe this is a retest and a push higher. We'll find out when earnings come out. But if it does start to pull back, this will definitely affect the NASDAQ 100. Like I was saying, a lot of these tech companies have hit their all-time highs, so maybe they're running out of gas. Who knows? Google, we're still a little bit off our all-time highs. Something to watch. Will they ever get their artificial intelligence device up and running properly and have a good, maybe a commercial or presentation that goes well where they can present it to the world? Maybe this stock could get a little bit of boost. It's been moving a little slow ever since it split 20-for-1. Had an amazing run from COVID to 2022. Amazing run, just like these other tech companies. All right, so let's switch over and let's look at the actual charts. I have some levels. So I'll explain this. This is the ES, which is the S&P 500 futures. The reason I marked this chart up is because it trades 23 hours a day, so you get more data. So last week, we sold off out of this 2-hour supply. Took a couple trades off of this. Used some XPX options. I love those. You get the full market move of the S&P 500. So if it sells off 50 points or it goes up 50 points, you get that on an option contract. You buy at the money, 50 times 50. That's $2,500 a contract. So definitely want to check those out. I don't really like trading SPY. I know a lot of people trade it because, you know, you can get a contract for like $200, but I'd rather pay the $1,200 per contract on XPX because the risk reward is better. If the SPY also moves with the S&P 500, but it's like 1/10 of the move. So if it moves 50 points, you only get a 5-point move on the SPY. So on average, it moves about 30 points a day, which means on average, SPY moves about 3 points a day. But your risk reward at 3 points, I mean, if you're risking a point to make 3 points, I mean that's pretty good. But just think if you're risking 2 points to make 30 points. You got a 1 to 15 risk reward ratio, and that's how you become profitable. Even if trades don't work out, you know, you're probably like at a 7% or something, 7% win rate. If you have a 7% win rate, you're profitable. So just check those numbers out. Again, I like to trade XPX. But the levels we're watching, we consolidated last week in this level. That's why I've marked this. So obviously there's some institutional buying down here. It pushed the market up. We have this area of consolidation marked. We have a 4-hour demand right here that we're holding. Holding right above. So if we do have a pullback, we may hit this 4-hour demand. Then I have another 4-hour demand where some buyers are at 45.34. And then under that, let me zoom out and show you the overall uptrend that we've been in. And this is the uptrend we've been in and we've been holding. And when I go back down to a 4-hour chart, you can see that we're off of the trend line. So we may pull back to this 4,500 level where I have a weekly demand. And if we put the Fibonacci retracement levels on here and we start at the low and trace it back up to the high, we come right off into this area in the golden zone where this weekly demand is. So we may get a pullback if we break through these levels. We could possibly get a pullback into the 4487 level. Definitely want to watch for that, depending on the Fed decision. Let me remove this. So on Google, let's go over to that. Google, we're holding this weekly demand at 119.59. I believe we have a 4-hour supply right above that, which is very close at 121.92. I'm not taking any trades off of this because the risk reward just doesn't work out for me. You're risking $1 to make $2. Doesn't really make sense. So I'm not really taking a trade off of that. But I'm just showing you these levels. We got a 4-hour supply of 123. We have another 4-hour supply of 121. We have a weekly demand at 119. I'll put the fib retracement on this, and we'll see where we could possibly move back into. So on the fib retracement, we're back in the area where it said we can move back into. So maybe we'll get a bounce here. But like I said, the risk reward for me to the next, from demand to supply, doesn't really work out. So I'm not really placing any trades. I have some long positions in this, but I don't want to trade this right now. All right, let's check out Meta, and let's check out Microsoft and see what levels we have. So on Microsoft, we formed a 1-hour, we formed a 2-hour demand zone at 346.54. We're kind of opening and hanging out in that zone right now. If this zone does break and we get a bad earnings, we can move down into the support level at 328.35. And then hopefully that'll hold. So that's something I'm watching. If not, if this level does hold, we can push up into this 353.82 level, or maybe gap up above this and push up into this 366 level. So this is definitely something I want to watch this week. I may can place a trade off of this, but I'm not gonna bet on a trade pre earnings. I'm just gonna let the earnings come out and then play that retest of a level or maybe a breakout of a level. But that's definitely something we want to watch. So on Meta, we're in the same similar situation. With Meta, the risk reward doesn't really work out for me. So this is similar to what I was saying on Google. I don't really want to place a trade. We're opening in this supply zone where we found some sellers. We sold off, and now we're coming down. Hopefully we'll hold at this weekly 291.45 demand. If we get a bad report and break through that, we can move down to 277.27. Or if we get a bounce here, we could possibly move up and try to break out of this, out of these sellers between, maybe get a 20-point move up, break out of these sellers if we get some outstanding earnings. That's definitely something I would want to watch. We hit that all-time high, like I said, on a lot of these tech companies, and we just ran out of gas. So we need some new information to come out, some new projections. The whole AI story's kind of dead. They need to start monetizing these things, but this is something we definitely want to look at and watch. I don't want to place a trade right now as long as we're in the supply zone. The risk reward doesn't work for me. Maybe if we have a pullback and we hit support, maybe I could place a trade if we find some buyers here back up to 291, or if this level does break, maybe place a trade down to this 277 support using puts. With supply sitting right here, that could work out. Definitely want to watch that. So Meta is on the watch. Microsoft's on the watch. Let's check out, what do we have left? We have, did we check out Amazon? So Amazon, we're in a similar situation. We came up into supply. We couldn't get out of supply. We formed new supply and supply, and we are pushing down. We have support right under supply at 125. So there's not really a trade I want to focus on to the upside unless we get out of this supply zone area and get up here to 136. Maybe I could place a trade to 143 if we can get above this from earnings. If not, and this level doesn't hold and the support doesn't hold, maybe you could place a trade using puts down to this 121 support. But the risk reward doesn't really work out here, so I don't really want to play this. I'm just showing you guys these levels. Let's look at the highs. So we're way off the highs. Well, not way off, but we're about 50 points off the highs right now on Amazon. So maybe it has a little bit more steam to pick up. It's been kind of lagging this year. But that's what I'm looking at. Yeah, so basically we're just talking about supply, which is sellers, institutional sellers. They're the ones that move markets down. And institutional buyers, which is demand. They place these massive orders here. And the market will not move lower unless their order gets filled. So they may have an order right here for, they may be buying $100 million worth of Microsoft right here. So enough sell orders have to get here in order for these buy orders to get filled. And if enough sell orders hit right here, it'll break through these and move lower. If enough sell orders hit here and the orders start getting filled and there's no sellers at this level, the price will start pushing up, and vice versa. Up here, if if we don't have enough buyers to get through this sell order, then price will push down. And that's just how the market moves. We learn about this in economics. The stock market is a big auction, and it's moving off of supply and demand. So come over to Black Edge Trading, and we'll teach you how to read these charts, find these levels, and place trades off of them. You can also invest off of these levels. If you're buying where institutions are buying, and they're the ones moving the market, and you're selling where institutions are selling, and they're the ones moving the market, then it's pretty hard for you to lose once you figure out how to identify these zones and learn how to get entries and exits and be an active investor in the market. All right, guys. Well, thank you for your time. We'll be posting more videos. Hope this was helpful. Please like, subscribe, and share. And check us out. Check us out on Teachable. Check out our Discord. And also, hope you guys have a good week. Make sure you manage that risk reward, and put proper stop losses. All right. Thank you, guys.